Well, g'day there, traders. Thanks for tuning into this Thursday market update. What I'd like to do for you is just talk about the Dow Jones Industrial Average, where it's sitting and where it appears to be moving as we transition into April 2014. Once we get through that additional analysis or that initial analysis, I'll then move into the S&P and also the NASDAQ and sort of come to some, a theme and conclusion of where this market appears to be heading leading into and throughout 2014, or the major sort of primary sort of trend that we are really establishing and beginning to kick off right at the current juncture. So what I'd like to do for you now is really just draw your attention to the 16,500 level on the Dow Jones Industrial Average. As you can see, since the beginning of 2014, so going back to January 1st, 2014, the first day of the trading year where we had this nice bearish engulfing candlestick pattern at a resistance level, we've really come up and we've hit it once, we've hit it twice, we've hit it three times, and here we are currently poking our head all around this very, very important, what we call pivot point. All right, or a resistance level, a turning point in the overall market. So what's happening at the moment is that the sentiment is really getting set up to shift into, or set up for a major shift for the next 2 to 3 months. What I mean by that is if we break out above 16,665, so if we get a break above, a close, and a continuation above this level, then you should be looking for bullish trades across all three of the US indices. At this stage, all three of the US indices, so the NASDAQ, the Dow Jones, and also the S&P will be in agreement, which is a very, very important piece of trade confirmation. What could also happen, however, is that we get a strong rejection at this resistance level. We've had a rejection here. We've had another rejection in the month of March, and there's nothing or no inclination telling us that we cannot have another rejection at this level and trade back down into the support level here around 16,112, or into these lower support levels about 15,770 or even 15,400. Do I think we're going to come down to one of these three support levels? No, I do not. I do think that the actual market movement and the direction that the market wants to move is bullish, at least for April 2014. I'm very excited about where the market's trading because it's offering us a lot of individual trade setups and a very good understanding of which direction the primary trend is continuing to move in. If I change this perspective to the S&P 500, if you look at any of the media or the news stories, you're seeing that the S&P is closing out what we call ATHs, or all-time highs. That's supposed to be a T in the middle there. And we're there by literally a matter of pennies. This 1,889 trigger did get hit today. We are trading exactly 40 cents above that, or what appears to be, $1.30 above that, as at the close of Wednesday afternoon, the 2nd of April 2014. What I said during Pivot Point Pro over the weekend was that I wanted to see the Dow Jones Industrial Average close and break out above all-time highs before we get net bullish on the overall index positions, or any of those arbitrary sort of momentum triggers set up on the ETFs or on the actual indices. We are very, very close to that occurring. That is why I'm presenting you with this midweek market update. I do not usually do this, but when we're at these very important pivot point levels, when we're at these support and resistance levels, when we understand and know that the market can really only go one of two directions, this is the time when you want to be setting yourself up to enter into the applicable directional trades which are set up individually. So what I'll do for you in the next video anyway is address some of these top 12 shares which are going to, or which should anyway, move in the direction of the overall market if in fact it decides to break out bullish. One of the only problems that we have across all three of the US indices is the fact that the NASDAQ has retraced quite a ways and it's nowhere near these old swing highs which were established in early March. This in and of itself isn't anything to be worried about yet. If we do start closing and breaking below these swing lows established in late March down here, then we would have a little bit of caution, would warrant some caution on these other two US indices. At the moment, we do not have them, which is still a very, very bullish signal. As you can see, the exponentials, we could have simply just bounced off the 50, a quick little whipsaw down to that 100 simple moving average also, and now we're simply just resuming that long-term primary trend which established itself in March 2009. And if we want to go all the way back to March 2009, we really need to bring up a weekly chart. Now this is a weekly chart, and you can see that obviously the trend is bullish and it's been in effect for the better part of 4 or 5 years now. All right, it really has, and it's just continuing bullish. So there's not too much you can read into it in the way of the Nasdaq. We do want to get a close above 4,394, but having said that, the Dow Jones Industrial Average is definitely the most important out of the three. Once we get that confirmed all-time high, then it's really off to the races, and this market can really move quite a ways higher, which is going to be very exciting for us as individual swing traders. So what I'll do for you now anyway is have a look at some individual stocks. We've got Apple to begin with, had a little bit of a false Bollinger Band whipsaw or breakout. Having said that, though, we have a doji candlestick today. Not a whole lot to take away. We did have a re-entry at 542.06, which should be triggered if you are in it. We came to the conclusion that this could be some form of a little bull flag setting up. You can see this little retracement back into the exponential moving averages on declining volume. So there's a really good risk reward opportunity to get in even above the swing highs here, or even at 552.50 up to 567. So that's the trade set up on Apple. Amazon's just resting down here at support levels. You can see the bidirectional trade set up, 349.50, 328.52. AXP again, it's just really struggling to break lower in the face of such a bullish market. AXP is looking quite bearish. So you can see that the two, or this individual share and the individual market, are really conflicting one another. So you can see how bidirectional I am on AXP. It's not really a go-to share this week, but you can see the basic structure, 88.78 and then 94.51 on the bullish side. Baidu again getting a nice pop, and we spoke about this retracing back into approximately 61.8 of this bearish sell-off right here. And what we wanted to see were reversal candlesticks all around this location in between these three green lines. So we're getting very close, but you can see we have an upper wick on this doji candlestick, or a spinning top candlestick. So it's not really a trade you want to be chasing. This may take about 5 days to set up, but once we get up to this level and you start seeing those bearish engulfing candlesticks, those dark cloud covers, or those bearish piercing patterns, shooting stars, hammers, that's when you want to place your entry for the rollover back down to support, much like Amazon, which occurred right here. So you come up, you fail the 618, and then you catch the breakdown to the bearish side. So that was a really good trade from 2 weeks ago. Caterpillar, fantastic trade, broke out very nicely. We had an entry here about 2 weeks ago, or a week ago, at 98.89. Today was the day where we really made a lot of money trading Caterpillar, or last night. If you're not in Caterpillar, I wouldn't be chasing it. We're a couple of pennies away from our $103 target. If you want to liquidate some of your positions at this resistance level, you can definitely do that. If not, you can hold up to my ultimate target up here, about $116 a share. So one thing to pay attention to, definitely earnings. Please liquidate those positions before earnings. What we have also is Google. Now, Google is also sort of playing that very similar role. Let me just delete this perspective box. You can see it's bouncing up into support, and it's not really a share which looks very healthy at the moment. Earnings is very close, so what I suggest you do is wait for earnings to finish before you start looking at entering into any Google trades. HD, however, is looking incredibly bearish. You can see these two shooting star candlesticks, one here, one which established itself on Tuesday, and then again we almost had another one on Wednesday in the face of such a bullish market. This really has the potential to sell off, and sell off quickly, but we're just not getting those confirmations in price. So what I can do is I'm going to move this trigger up, and I'm going to move it to 78.25. This was an arbitrary bullish trigger, but I told you why I would not be placing it in my own account over the weekend in Pivot Point Pro, and that's exactly how it's played out. JPM, leave this one off the radar. Earnings is quite frankly about a week away, and it's not worth trading. Netflix, again, it looks to be setting up what we call a bear flag, and it could break down bearish. So keep an eye on Netflix. Starbucks, very close to breaking down. This is one over the weekend, which was one of my favorite trade setups. It is moving into Thursday's trading session, so we only have 2 days left in the trading week. But this trigger here, about 72.52, is very exciting, and there's a really nice profit opportunity down to $70 a share, which would be very nice in those put options. So what we're also establishing, having said that, is the potential for a little bit of a bounce, off support here. So I can get, what I'd want to see is a few more days of candlesticks, whether they're bullish, bearish, it doesn't really matter, but just to define that upper area before we start bringing down this 79.25 bullish entry to trade up to these old resistance levels. So Starbucks is definitely a work in progress. We will get there soon. XOM again, this is a trade continuation from last week. What appears to be happening is that we're setting up what we call a bull flag. So this is by definition and by probability expected to break out bullish. You can see we had a trigger here at 97.53. We also had a trigger down here for about a month now at $92.90. What's happened is that we gapped up, we traded down, and we're really establishing again a little bit of a bull flag, or it could even be what we call a stair-step pattern. The thing is, which is super simple to do, is to set your trade up right about 98.18 if you wanted to place this trade. I will not be doing it myself. At the moment, the risk reward doesn't really justify that individual trade. So I'll just be sitting on the sidelines waiting for a better re-entry into XOM if you're not already in it. So there we go. That's my perspective on the market and how that translates to some of our top 12 or all of our top 12 individual trade lists. If you want to learn how to do this for yourself, have a look at pivotpoint-trading.com, sign up for a scholarship, learn how to do it autonomously. All the best, everyone. Goodbye.